Well, good day, traders. Chris Weston here, Head of Research at Pepperstone. Well, it's going to be a big week. There's certainly various risk events that we're going to be watching which could affect multiple asset classes indeed. If we start on the political side of things, we're continuing to watch headlines around Donald Trump's involvement with President Xi and how close they are to forming a deal. I think markets have become quite desensitized to the headlines to an extent. We're pretty exhausted about how this is all going. We probably should hear some more news in the next 3 to 4 weeks, but I think markets have got to the point now where it's like, show us some meat on the bone or we're not really going to act too closely. We've been sort of pricing in the idea of progression and patience for some time now, and I think we really want to see the proof in the pudding here and the devil being in the detail, and we're probably going to hold off from that side of things for now. The other thing which we're watching, of course, is what's happening in Brexit as we go into Wednesday's vote. Wednesday for us here in Australia, Tuesday night UK time. The market is certainly of the belief that it will fail. I mean, if you can look in the bookies, you've got about a 35% chance that the third vote will fail. I mean, if we look at cable volatility at the moment, on the week, you can see cable vols around 16.5%. What does that mean in layman's terms? Well, if you actually put it through the Black-Scholes formula to have a look at the implied move over the week, cable's expecting about something 270 points. Now, of course, we can buy and sell volatility, or we can use it to understand how the market sees potential moves. And obviously, volatility is directionally agnostic. So in theory, we could be pushing, convincingly above 133, highest level since early, 2018. So that's something we are watching pretty closely. We could be pushing above 135 if the implied vol is actually anywhere near the money, or we could be pushing back down to, say, the 130 level as well. So we are watching, what's happening in cable. I think the market expects it to fail, and if we do obviously see it pass, then you could see obviously a very, very strong bid coming in the pound, and there is some weight towards the belief that 35% is perhaps a little bit too low, but we're not going to need to see just the DUP party. We're going to need to see the ERG party, but most of the Eurosceptics come on board, as well as some Labour voters, to close that 149 seat deficit. Of course, if it does fail, then we obviously turn towards the European summit on the 21st and 22nd to see whether or not they're going to accept the extension, and also whether they push it out for 2 years, and ultimately what that means longer term. Are we going to see a new general election? Are we going to need to see a second referendum, or are we going to see a vote of no confidence being pulled, and obviously political moves being made with people like Dominic Raab or even Boris Johnson potentially stepping forward as a potential leader in that situation? Of course, that's going to breed uncertainty, but at the moment market sees a hard Brexit as a fairly low probability. So that's something we are watching very closely, and certainly if you are looking at your positions, whether you're looking at Euro Sterling, Sterling Yen, Sterling Aussie, for example, or cable, the fact is that vols are fairly high, and therefore you could see oversized moves. So definitely put into perspective your position sizing accordingly into that situation. The other big event, if we're looking at central bank issues, which of course probably just falls below for me in terms of this sort of subordinated chain of volatility, is the idea that we've got a Fed meeting coming through on Thursday morning at 5 o'clock. Half an hour later, we get the new press conference coming through from Jay Powell. We've seen a lot of Fed speakers of late, and they've done a pretty good job in easing financial conditions. Inflation expectations have pushed up a little bit higher of late, and that's been largely down to the fact that real yields have been falling. Inflation-adjusted yields are multi-year lows at the moment. 50 basis points on 5-year real. That's had a negative influence on the US dollar, and that's something we're continuing to watch. But I think immediately at 5 o'clock, we want to have a look at those dot plot projections, the economic projections that the Fed will be portraying to the market. Now, there's been obviously a trend in negative data flow, and as Q1 is running around 0.5% in terms of that run rate for Q1 GDP. Most people do expect it to snap back a little bit, but I think if you're looking at that situation, there are some signs that they will have to downgrade their GDP forecast for 2019 from, say, 2.3 to maybe 2.1%. We're watching to see the Fed funds projection as well. We're probably going to see them lower that down so that they'll signal that there's going to be one rate hike for this year. Of course, if they do take that off and the median projection is for none, that would have a negative impact on the US dollar. But one suspects they'll keep one on the table just for good measure coming through. And of course, we're keeping an eye on those longer term projections for things like core PCE, things like and the Fed funds as well, which they consider to be the longer term neutral rate playing through. What we're watching in Europe, I think, is absolutely key. On Friday, we're going to see the PMI numbers and also the services numbers there. And if we look at the composite numbers there, we are expecting a slightly faster pace and expansion. Euro vols this week are, fairly subdued. They've been subdued for some time. but the 1 week implied gives us about a 74-point move on the week. Now, how does that play into trading euro dollar? I think you've got to have a look at the top side, and around that sort of 114.20 is the upper Bollinger Band. The implied vol would take us just shy of that situation. We've also got the February peak, or the swing that we saw there, just a little bit lower than that situation. So around 114.16, 114.20 seems to be where the euro dollar would be theoretically capped this week. On the downside, I think people will be looking to buy the dips, but obviously if we get signs that it's green shoots playing through in their composite numbers on Europe, then people will start saying, well, China's looking a little bit better in certain metrics, thanks largely to the credit boost we've been seeing, and also what's happening in that situation will play through in a more positive feel towards Europe longer term. And perhaps we've seen the lows, and the DAX again is something that's quite interesting. If we see a firm break of this kind of horizontal resistance level you can see on the daily, that would be a screaming buy in my opinion. I think that technically that would look very good. And the S&P as well. The fact we've closed above 2820 is also quite bullish in that sense as well, and suggests that we're probably on a probability scale more likely to see newer highs. But a lot of that will be determined on volatility, what's going to happen with real yield. If real yields continue to push lower, then of course I think the S&P will continue to find buys in that situation. Here in Australia, well, we're firmly watching what's happening in the Westpac leading index. I don't think markets will be overly sensitive to that, but I do think it has interesting ramifications at a market which I think is quite rich in terms of interest rate expectations. I think 42 basis points of cuts here in Australia over the coming 12 months seems fair. I don't really see huge amounts further pricing through that situation, and bond yields have moved quite aggressively to the point where I think they're quite rich, and I think it's going to be difficult to price in much more in the way of cuts there unless we see volatility really picking up and a much more negative feel towards global equity markets and credit markets as well. So that makes the Aussie dollar a buy. I think there's better currencies to buy out there personally, and I'd be playing a stronger sterling Aussie in that situation. But we've also got our eyes on Thursday. We've got the employment numbers playing through where the market's expecting 15,000. But if I look at around the rates market around the world at the moment, the Fed are pricing in 20 basis points of cuts next year. In Australia, we've got 42 basis points of cuts over the 12 months. New Zealand, we've got something like 21 basis points of cuts priced over 12 months. These markets look quite rich at the moment, and that richness has suppressed volatility, and one thing we're watching. But continuing to watch what happens in euro dollar. Can it push up into that high 114? A lot will down to PMIs. What will the Fed say in a market that's already positioned pretty dovishly if you look at the rates complex, and also what's happening in Aussie jobs? I think those factors will be very interesting, but of course it's going to be down to Brexit for those sterling traders, and do watch your positions. I think they're going to be very important. When you've got high volatility, you've got to keep that position sizing quite small in that situation.